All right, it's the 16th of October 2024. We've got about 25 minutes to the New York Open. We're going to start our analysis in a bit. Just post this. Okay, just a second. Just want to check if sound is good. Right. Um, okay. Just a second. All right. Okay. Um, yeah, we've got about 25 minutes to New York Open. So let's take a look at the charts and see, and do our analysis as usual, and see what opportunities we might have for the day. Um, all right, one second. Just all right. So this is the daily time frame. Um, Price did close yesterday above 2650, and we've come to weekly resistance, and we've broken above it, and we're trading above weekly resistance. So price is back again at all-time highs on gold. Okay, we're very bullish. We started bullish somewhere. We started, I think, on Thursday or Wednesday last week, maybe Wednesday last week. Price started turned bullish. When was that? The 10th. 10th was Thursday or Wednesday. Yeah, it was Thursday. So Thursday, price went bullish, came close to 2,600, came to this resistance area here, very close there. It was too bullish to come further down. There was enough liquidity below this weekly support level, so price grabbed liquidity and has been bullish since then. We've moved about 760, 770 pips since then. So we are very bullish today. So let's get to the trading chart and look at what zones that we have. So before I kind of draw the zones, I always do a recap of what happened the previous day. So yesterday, I'd taken sells from here. There was there was supply here, and I'd taken a sell, and it did work out. It came dropped about 100 pips, but didn't hit my TP. My TP was just below that and didn't hit that, and price eventually turned and went up. And once this uh, M15 bull candle, strong bull candle closed here, I just closed the trade at break even, right? Maybe a little bit of profit. I just closed the trade there, and then that's it. That was after that. That was the end of the stream. So if you watch the last 30 minutes, you'll see what happened. Anyway, so let's clean the chart, and let's start with a fresh chart. Let's get rid of all of these things, all of these lines here. Let's get rid of all of that. Okay. On the daily, we have created new support here. Daily support. There's a bearish candle here and an immediate bull candle there. So we have created daily support there at 2648. Okay, 2648. We've got daily support. Yeah, around 2650 basically. Now let's look at our zones. Okay, there are zones down here. I'm going to leave them as they are because these zones will be valid at some point when price comes down. So I'm not going to delete them off the chart. I'm going to leave them there. But obviously price is not going to drop all the way down 1,200 pips today. So we don't need to worry about any of that today. We just need to focus on this area. This is the area that we're going to try to look for buys today, to move for price to move up because we're at all-time highs. There is nothing to stop price here. Very likely price is heading towards 2,700, and 2,700 is just about 200 pips away. So that's where we're probably heading today, right? So if you look at the daily chart, that's exactly where we're heading. We're heading towards 2,700. Once candles begin to close above weekly resistance, like 4-hour candles begin to close above 2672, we're heading towards 2,700, right? So we will be on the higher time frames. If you are a kind of a swing trader or trading the higher time frames, the 4 hours and the 1 hour, then you want to see a close above 2672, 4-hour candle or 1-hour candles close above 2672 to get to 2,700 and above that. Now that's the only psychological area that we have. It's a psychological round number that we have here, but there is nothing to the left. So price can touch that, react a little there, and continue higher to 2750. It's very possible, right? We could have a big move up today or tomorrow. Keep in mind, we've got retail sales tomorrow. There is no news today. Just look at the news calendar. Yeah. So there is no news today. Just a second. Yeah, so there is no news today. Tomorrow, Thursday, there is retail sales, and yeah, that's it. Just retail sales tomorrow. Yeah, so it's just going to be a very regular trading day today. We shouldn't have any surprise moves today. Okay. Right. Let's get on with the analysis. 4-hour time frame. Let's move these to the left. Okay, so here, right here, there is a demand zone right here. Okay, right there we have a demand zone. That's a rally, a single basing candle, and a rally. Leg in, base, leg out. Okay, we're going to keep this here for now. I'm going to kind of refine these if needed later. Here also we've got a rally, a base, and a rally, right? So there's the leg in, a single basing candle, and a leg out. So let's mark that as well. Then down here we have a rally, a base, and a rally. So when you got to keep this in mind, when price starts to create fresh H4 demand zones, consecutive fresh H4 demand zones, that means we're very bullish and price is moving high, right? So don't try to uh, maybe sell in this market. Trying to sell is not a good idea in this market, because don't try to catch a top. We are very bullish. We've come into this, we've already tested this area. All right, price is already tested here and closed above this. A 4-hour candle has closed above this already. A very strong bullish 4-hour candle has closed above weekly support. So what you want to ideally be doing is looking for a pullback to continue up, to retest the new high. That's what you want. Look for price to pull back, create support, retest the new high. That's the kind of trade that you should be looking for today. Okay, so that's about it. I'm not going to draw any zones below that. This doesn't make, price is not going to drop, 350 pips down today. So that's going to be the only 3 demand zones there. Let's put in the numbers here: 53.68, 564, 368. Okay, and here 362, 75. Okay, and here 951, 536, 951, 536. Okay, perfect. And we can also just extend this to right. Okay, so that's the closest H4 demand zone that we have. This I am going to extend to the right. That's the only supply that we have. That's the only supply. There's nothing above it, absolutely nothing above it. Okay. And this was a high liquidity zone. Let's take a look at that later. I'm not gonna. Let's look at the demand zones. Let's try to identify which of these are high liquidity zones or which are not. Now, here, that's a demand zone there. Just fold this for a second. So this demand did take out this supply here, right? If you look down on, if you go down to the H1, it's a lot more clearer. Yeah, you have this that took out on the left. Here you had, even on the H4, there is supply right here. There is supply right there. Okay, there's a supply zone right there that was taken out by this move up. Okay. So if you look on the H1, yeah, this was the one that broke this supply. So that, I'm going to mark this as a high liquidity zone. Let's look at the one below. Is this a high liquidity zone? Did this take out? Yeah, this took out, I think, that supply right there. Let's just see. Yeah, so there was supply here, and that supply was taken out by this move up. This supply was taken out by this move. And then there was supply created here that was taken out by this move up, right? So there is a rally, and these are 3 basin candles and a drop there, right? And that was taken out by this. So just to not cause confusion, let me just draw it properly. Okay, so that's a rally and a drop. So that's a supply zone. If you're looking on the 30-minute time frame, you'll see a basin candle right there. Okay, that's the basin candle. A rally, base, a drop. And that was taken out by this move here, okay? And then on the H, yeah, it was taken out by this move going up, this candle, this price moving up here, took out this supply. So this too is a high liquidity zone, right? Then we have this area here, and that's supply too. And that was taken out by this move up, right? The move that started here, went up, took out all of that supply. So this is a high liquidity zones too. So price is creating high liquidity supply, high liquidity demand zone. Sorry, yeah. So this supply was taken about this, it was taken out by this demand. So we're creating high liquidity demand zones. Okay, so that's our closest one. Now, let's take a look at the supply. What's happened here? So there is H1 supply, and on the 4-hour it's not clear, it's just a wick. But on the 1-hour, it is obvious there is a rally there. There's a rally, there's a single basin candle, and there's a drop, right? But price has come a bit into it. Here it did come, and now we've come deep into it, okay? We've come deep into that zone. So if you look at that candle right there on 30-minute, just want to see if there's a liquidity candle there. Yes, that is a liquidity candle. Probably look on the 15-minute. Yeah, there you go. That's the candle. And if you go down to the 5-minute, you'll see this candle right here. And in terms of a supply zone, there is a supply zone right there. So this close here is 8207, 8207. Okay, that was the supply zone. Rally, 5 basin candles, and the drop. Okay, and that is that 15-minute liquidity candle. That's that big candle right there. That's a 107 pip candle. Inside that is this candle here, and price tried to come back in and it couldn't. It failed. Okay, it tried to get back into this candle, it couldn't, failed, and it just dropped. And then if you look right, so it didn't come back here, but if you look right here to what happened today, we've come in and we've touched that 2682.07 perfectly. We touch it to the pip, and we did drop about 90 pips. Okay, we did drop about 90 pips. We touched that area, and we've come. Now, I'm no longer. I mean, if this happened in the New York session, I've said this before as well. If this move, now this move happened after the London, about 2-3 hours, about 3 hours after the London Open, so between pre-NY and London session is when price tapped it here perfectly, 2682.07, and dropped 90 pips, right? I would have been looking for this trade in the NY session, but it didn't happen. Unfortunately, it's happened here. This is the trade that I would have taken, and the stop loss would have been above the light red areas. That's about a 20 pip stop loss to take the trade coming down to this green area, but that's already happened. It's touched it. So I'm no longer going to be looking to take a sell trade here because this has already happened, right? It's the first time is when I'm interested in taking a sell trade. The second time, it might work, but I believe it's weaker. So that it's very likely in a bullish market, price is going to tap this area and continue to break out this area and continue higher. So if price comes back here, I'm no longer going to be taking a sell trade in here because this has already happened. This is the trade that I would have wanted to take in this light red area. As you can see, I showed you I'd drawn this light red area a couple of weeks ago. So if you go down to again to the M5, on the M5 time frame, you can see on which candle it's drawn. It's this. The dark red area is in that H4 supply zone, in the H1 supply zone, and inside that is this 5-minute big, kind of a big body candle, right? There's a word, there's a name for this candle. I think it's called an expanded range candle. There are retail traders have all sorts of names for these candles. This is called an expanded range candle, right? It's out of this range. This is the out of this supply, this base. This is the biggest one. Okay, that's the one. That's the leg out. So that's a supply zone as well. You have a drop. You have four basing candles, and then a drop. A drop, base, drop, and that's at 268207 is the base of that candle, and that's exactly what price touched. Right now we're coming back there, so now I'm no longer going to be looking to take a trade there. So I'm going to get rid of that light trade area now. Going to get rid of this as well. And now since we've come quite deep, that's a 74 75 pip zone, we've come about, prices come about 45 pips. So that's 2/3 of the way in. So this is no longer a supply. Once price taps more than 50% of the zone, I don't consider it a high liquidity zone because the liquidity is taken out, right? That's what happened. We tapped it, liquidity taken, and price dropped 90 pips. So now it's coming back. So the liquidity of that zone is far less than what it was before. So, all right, but that is supply. We haven't broken through it yet, so I'm going to leave that as supply. Okay, right. So those are the zones that we have for today. Let's just clean this up. Okay, supply there. It's for demand here. Perfect. Now, okay. So if price pulls back, here's where I want to take a trade, right? Just look at the H1. Yeah, that's there or there, right? Now, let's take a look at this area, this first demand zone. There is a very strong bull candle leaving the zone. On the 30-minute is just that candle. There is nothing here on the 30-minute. On the 15-minute, it's just that candle right there. It's just that candle. Maybe on the 5-minute, you have this candle right here. It's a 43 pip candle. I'm going to mark that candle. But I'm also going to bear in mind that this low here has no bottom wick. So if price comes down and breaks this low, we're very likely going to break this low and come down to the next demand zone. Okay, just keep that in mind. There is no bottom wick here. But I'm going to mark this because this is the largest candle in this base. All right, that's the largest candle in this base. If you look at the 15-minute, it's a part of that big candle, so that's fine. On the 30-minute, it's still a part of that big candle, that's fine. Okay. Obviously, I can't mark the entire 30-minute candle because that's a very big candle. It's a 105 pip candle. And then the 15-minute candle 2 is a big candle. That's a 79 pip candle. So the 5-minute suits me better. That is just about a 40 pip candle. That's fine. 71.32, 137.10. Okay, high 32710. 32710. Right. So if price gets in here, I'm going to be interested in seeing what it does. And inside that is this area right here, this candle right here, this 1-minute candle. So since we're here, I'm going to just mark this here. close 70.72, 70.72. Just a second. Yeah. Okay, and then there is a demand level, 5-minute demand level here as well, 69.85. So the reason I'm marking these areas is when price gets there, I want to see if you have a reaction and take a trade there. And the stop loss is going to be under this candle right here, okay? So if I get a trade there, that's about a 25 pip stop loss. If you just go on the 1 minute very quickly, yeah, that seems fine. And maybe further down here as well. This 1 minute candle, 69.14. We are very bullish, so I'm not sure how far price is going to pull back. It doesn't need to pull back too far. We might just tap into this area and then 80 pips and then just continue higher. Okay, so I'm going to pay attention to that area. Obviously, yeah. So that's the candle that I'm going to consider. That one candle there. Just 1 second. That's a liquidity wick right there. That's a liquidity wick. That's a London session. It's a London session. So $505, $710. Right. So I've drawn a fib on that candle, and I've also marked these demand areas. If price ideally gets somewhere here, I'm going to be willing to take a trade. And then if it comes deep, I'm going to manage risk. But that area, I'm going to be interested. If price gets to 2671, 2671.50, right? We've also got weekly resistance there, 2672, right? So around 2672, 2671, 2670, that area, okay? And then if price comes deeper, I'm going to manage risk. But if I do get a buy trade there, the idea is to hold the trade to the end of this zone, right? So if you get a trade here, to hold it, that's about 150 pips. That's to the end of the zone because price should break this zone. We've already tested it. We've come deep into it. We've tested it. So if price comes down, we should grab liquidity, come up, break this high, and continue higher. That's the idea. Let's look at the zone below in case we come further down. On the 30 minute. Okay, so on the 30 minute, there's this big candle right here. Okay, so we're going to do the exact same thing. We're going to mark that candle right there. High 514.019. 514.019. Now price may not come there today. May not pull back for entry. I don't know because we are very bullish. This is the open of the NY session. This is the first 15-minute candle. This is the first 15-minute candle. So I'm going to wait for that to see how that candle closes before I decide to do anything. I always wait for the first 15-minute candle because I want the NY open first 15-minute candle to always close. All right, so back again here. So this is that 15-minute candle. It's a big candle out of this liquidity area. It's a push-up. It's, again, an expanded range candle. All right. Um, how much is size of that candle? That's about 48 pips. Okay, that's okay. And then we have this. So what price did was, yeah, that's that candle. That's the candle. 68, 28. Sorry, 28 pip candle. Price came back into that candle, tried again, failed, continued higher. Okay, so hmm. Okay, that's 50 pips. This candle is a little too big. I'm gonna bring that down here. 305, 019, 305, perfect. And then it's 0.6305, 6305. Okay. Two eight two, 206. Okay. So this is where I'm waiting for buys, right? This area right here, 2671, 50, 2671, 2670, or 2669, 50, somewhere on that area. Looking for buys to come back, retest this high and continue higher, and break this supply zone. Okay, that's the plan. And if you break this low here, then price is coming down to this demand zone down here, to this candle. We've already tapped this candle, but it's possible that price is going to react to it again because we've got a daily SR level right there, right? And then we continue higher from here, right? If you pull back further down, it's better because we get better RR. We get about 225, 230 pips. But let's see. Price is very bullish, so it may not pull back all the way down. We might just come here, get a reaction, and then just continue to push up. Okay. Okay, we've got about 7.5 minutes for the candle, 50-minute candle to close. While we wait, I'm gonna we're gonna look at what price did today. Okay. Just gonna look at what price has done today. Just 1 second before that. Got a 40 pip zone. 0.05. Let's see, count at 673. Okay. Here. Right. So this is where the market opened right here. Okay. This is where the market opened. Then price came down and made the Asian low. Right. So this low is 880, low 875. Okay. Perfect. That's the Asian low. Then we went up 4, 15, 6, 5. Yeah, so this is the Asian high right here. Okay, that's the Asian high. And that high is 7010. That's the Asian high. Okay, and then price created this is the London low. Pulled back a little bit, created the London low 815, 613. Okay, and then we created the 115. That's a high. We broke the high here. 1145, 12. That's the London high right there. Oh, 195. Oh, sorry. 5. Okay. So here's what price has done so far. The market opened here. We came down. We touched these EMAs, right? The fast EMA. This is a 30 period EMA. So even on the way the indicator shows, it's a 30 period, the 30 period EMA on the 30-minute chart. So even if you go down to the 1-minute chart, it'll still show you a 30 period EMA on a 30-minute chart. Okay, that's how these indicators work, how these EMAs work. I don't pay much attention to it, but price does bounce off them pretty well. So price did come, touch it. We created the Asian low. We pushed up. And broke above the daily high, right? This was yesterday's high, right there, 68.93. So if you look at yesterday's high, yeah, 68.93, right? This is the candle high. So the Asian session, what price did was, it came, created the low, went up, broke the previous day high, right there, came back below, right? Came down, ranged. So price just moved about 112 pips in the Asian session, creating a low and taking out the previous day high. Okay, that's what price did in the Asian session. Then we ranged for quite a while until London opened, and we created the London low. That's a London low. We broke the Asian high, closed above the Asian high, and we continued high into this supply zone, right? And the London session moved about, again, 150 pips. So we moved about 115 pips in the Asian session and about 150 pips in the London session. Okay. Now price has retested pre-NY. Price has retested the London high, closed back below, and we're trying to push down. We're trying, but it came down, We couldn't get back to the Asian high. We're going back to test the London high. If we close above the London high, then we're continuing to break this and go up. And then we might just not get a trade today because price may not come down here. Okay, so I hope that's clear. I hope that's clear. Price in the pre-NY tested the London high, closed below, came down, and is trying to come back up again now and retest the London high. If we close above the London high, is if we close above this candle here, basically 2682, if we close above 2682, we're going to break this high and then we're going to continue up. And there's nothing on the left to stop price. So we don't know, there is no price action. So we don't know where price is going to turn. Is it going to go up here? Is it going to pause somewhere in the middle and turn back? Nobody knows because there's nothing on the left. There's no information on the chart, right? These are all-time highs. So once we break this, the top of this red rectangle, this dark red rectangle, then we don't know where price is going to react to, what price is going to react to, and where it's going to react to, right? It could be somewhere in between this. It could be at 2,700. We don't know, right? Because it's just clean space all the way. There's a 150 pip move up from here all the way up here. Price can easily just shoot up 150 pips. And if it's very bullish, we can close above that, and then we can just continue even higher. That's all possible today. So we're going to wait because this is the area that I've marked on the chart. I'm going to wait at a high liquidity zone to see if price does pull back down here. We have created, we've taken out two highs. This high is taken out, and here, that is a liquidity wick though. The price to drop. Yeah, we should drop. I'm going to take a trade here. I'm going to take a trade here. Stop loss. Put my stop loss above this candle right here. Okay. Because this is supply. We've taken out two highs. And we should drop to 2675. Should drop to 2675. Okay. This high is 8101. This high is 81. Yeah, we should drop to 2675. At least there. We should drop to 2675 before we push back up. Yeah. Price has taken out these highs. This one has taken out that high. That's taken out that high. We should drop. 81, 78, 30. 81, 78, 30. $65. $2,675. Yeah, should drop there. 2,675. That's the area. It's about a 35 pip drop. $72. 2672. Sorry. Yeah. We should drop. Okay. Partial positions closed on the first one. Yeah, should close on the second one too. Two, six, two. Okay. Yeah. The reason I took this trade was two highs were taken out. So if you watch my previous streams, you'll see how I draw this fib. You see why the fib is drawn the way it is, how this fib is set up. This is not your default fib. Watch the previous streams. I've shared it many times. I'm not going to do it again now here. And in the NY session, two previous M15 highs were taken out. We are in supply. That's a liquidity candle right there. That's a 43 pip push down. Price came into it. So I'm looking for a move back down here to this area. So there's support, M15 support right here, 2675. I'm looking for price to come right there again. Okay, that's the whole idea of that trade, that sell trade. Yeah, so we should drop to 2675. 8207, right? What was it? 8207. That was the price came to. Yeah, 8207 was where price came to. It could come back up there before we go down. Let's see. That has no top wick, so price can push up here before we come down. There's no top wick here, but there is this push down. Two seven five 8020 20 275. Yeah, we could probably take out this high here. That's possible. Yeah. I'm going to close this trade if I'm going to close a couple of these positions if price closes above this London high here, right there. If you close above this candle, a 5-minute candle closes above this, that's how I'm going to manage risk. Okay. $48. Hmm. 2 minutes more for this 15-minute candle to close. Let's see. Um, the idea is that price is in supply. There is a liquidity candle right there. This one. Price is reacting to it at this midpoint at the start of the fib level. Price may even come up here or even here, and that's fine. But once we close a 5-minute candle close above the London high, then the trade setup is not valid, because then we're going higher, right? So the whole idea is price needs to kind of respect this high to come down to 2675. That's the idea. As always, there is a 50% chance, 50-50 chance of it working or not. Uh, Also, the bigger idea in this is for price to pull back for liquidity before it continues higher. So I'm taking a counter trend trade here, which is not always the best thing to do. We are closing bullish. A 15-minute candle is closing very bullish. So the next one should break the high. We should come higher. 2682. 25, 2682. Yeah. High 8195. Yeah, so this is closing bullish. 50-minute candle, we're closing above here. The next one should break the high. So the 30-minute candle also closed bullish just above there. Now, if we close above this, the smaller time frame, 5 minutes, close above this, then I'm closing. Probably these two positions, I'm going to close these two positions. Yeah, it seems like we're continuing higher. Yeah, this is just a bottom wick, creating a bottom wick to go higher. Because a 5-minute candle needs to close below this minor support here. You can see that 5-minute support. We need to a 5-minute candle needs to close below that, around below 267765 or 267750, below this fib level. Once a 5-minute candle closes, then we're coming all the way down here. We need a 5-minute candle close below this. Until that happens, this is just creating a bottom wick to continue higher. And yeah, how I'm going to manage risk on these three positions is that once we get up here and we close the 5-minute candle just, sorry, at this London high, close a 5-minute candle right here or above, then I'm going to close probably all 3 positions or just 2 of them. Yeah, so on the 5-minute, yeah, that was a supply zone. Drop, base drop. Price did come down here. Yeah, so 2675 is the spot. There's the place we should drop to here, 2675, right here. So we've closed a M5 bearish candle, but we've got to close down here below 267765. That's where the M5 candle, M5 candle needs to close below 267765 to continue to 2675. Needs to close below 267765 to continue to 2675, and then that'll be then I might just close all positions or just hold one position down here if we come down here. I should have opened this trade here, pending order. Missed about 3-4 pips. Anyway, let's see. We need a 5-minute candle close. 3.5 minutes. This candle has to close below this support. This minor support level needs to close below. On the M15, in terms of support resistance levels, we've got that right there. Then we've got this one right here. So once we close below this, we're coming down here. It's high 680, 680, and this high is 754, 754. Low is 7305, 70. So price is reacting to that support and pushing up. We couldn't close below. Yeah, maybe not wise to hold this trade. So the whole idea was for price to come down and close below here, and we didn't. We got a minute and a half for this candle to close. Unlikely. It's just pushing up. Yeah, it's pushing up. We're going to take out this high and then go higher. Yeah. I wanted to see a candle close inside the support or below it to continue down. Once we close, if this candle closes bullish, strong bullish, the next one's going to break the high and continue. And probably get to 2682 and then probably head to the stop loss. So once this candle closes bullish, I'm going to close. Yeah. Yeah, it's closing bullish, so we are gonna, yeah, it's closing bullish. So next one's going to break the high. It's coming down for a lower wick. I'm going to get close one of those positions because I don't want to hold drawdown all the way up there. Yeah, so we are rejecting that area. I'm going to close that other one as well. I'm just going to keep this one position. So basically, it's lost nothing. It's just a break even so far. And I'm going to keep this one here. And if you do come down 30 pips, fine. If you come here 50, yeah, just going to leave that. Because the whole idea was a 5-minute candle needed to close below 2677 or this support to continue down, and it didn't. It rejected. So we are pushing up. It's going to wait for this 15-minute candle to close. Let's see how the 15-minute candle closes. And if the next 15-minute candle breaks this high, then it's no need. There is no reason to hold this trade either. So manage risk in a very logical manner, right? In a very logical manner, I manage risk. That's the whole point. Once you draw your support resistance levels correctly, so that's a minor support. I mean, it's there on the 30-minute as well. You can see it on 30-minute. I wouldn't call it a minor support level. It's there on the 30-minute, and it's also there on the 4 hour, on the 1 hour, right? On the 4 hour, no, but on the 1 hour you can see it, and on the 30-minute you can see it, on the 15-minute you can see it, right? So once price tapped into it, I wanted to see a 5-minute candle close inside the support or below it. If it didn't, then we're pushing all the way up. We're just creating a bottom wick here. That's what this touch was for, to create a bottom wick to continue high. And seems like that's what price is doing right now. We created a bottom wick and now we're going to push. Once you break this high, we're going up here. So once price breaks this candle high here, the next one breaks this high, there is no reason to hold this trade. That's about a 15 pip stop loss. So once we break the high, there is no reason to hold this trade because we're going deeper in. The next candle has to respect this high to continue down. It should respect the high to continue down because we're very close to the London high. So if you look left on these levels that we drew, you'll see them touch perfectly. See, it's just a perfect touch. Once you draw them correctly, Just don't need to worry about. You'll see the reaction. You see how price touches them perfectly. We are pushing up. So minute and a half for this 15-minute candle to close. The 30-minute also is probably going to close. That's a liquidity wick. Yeah, we're going to continue higher. So once we break this high, then I'm going to close this trade. And that's how you manage risk, so that you lose very little. Because once you break this high, price is going to trade into this wick, right? It's going to trade into this wick. Once you break this high here, we're trading back into this wick. And just above the wick is the stop loss. So why wait for price to trade into the wick and hit your stop loss when you know that there's a more than 90% chance of that happening? Why hold the trade? Close it. Once price breaks this high, close the trade. So instead of taking a 31 pip loss, you can take a 14 pip loss, less than half of it, right? That's the idea. So we're going to get ready here. Yeah, we're closing bullish. That's the high. This is the high, 146. Here, high, 146. Yeah, that's the high. Once price, this candle is just about to close. So once the next 15-minute candle breaks the high, I'm going to close this trade. We closed a bearish candle. 5-minute close a doji. So we could push up, break the high, and continue higher. That's probably what's going to happen. Unless a 5-minute candle closes again, so it's the same idea as before, closes below 2677.65 for us to come down to 2675. Yeah. There's nothing happening today so far. So yesterday we got the move in after the 4-hour candle closed, right? So the 4-hour candle, yeah, we got an hour 15 minutes for the 4-hour candle to close, hour 13 minutes. So it might just range today because there's been no volume in NY Open. We got about another 45 minutes for NYSE Open. NY Open has done nothing, absolutely nothing. There's been no volume at all. So the next volume push could be NYSE, and then after that, after the 4-hour candle closes. Okay, price is coming up there. This high, I'm going to close this trade once we get up there. $81.46. So my stop loss, my hard stop is there, but when the trade gets here, above this candle high, I'm going to close the entire trade, not a partial position, the entire trade, because after that, as I said, we're going to trade into this wick. Okay, there's no need to hold a trade into holding a trade in more drawdown. Okay. Yeah, so this candle is going to close here and the next one's going to break the high. There we go. Yep. Okay, closed. Perfect. Manage risk perfectly. 0.1% loss. So I do have a pending order here. That's just with a 10 pip stop loss. I'm going to leave that as it is because that's a London high. So I'm going to see if you get a reaction there. If you do get a reaction there, then do take that trade. That's at the right at the London high, right there. This high is 195. Also going to wait for this 15-minute candle to close. So when you have a pending order there, that's with the 10 pip stop loss. If price triggers it, anticipating again, same idea, price to come down here. That's a 70 pip drop down here. If it doesn't and goes up, then you gotta get stopped. It's a very small position with a 10 pip stop loss. That's fine. But the whole idea is how to manage risk. See, so even though I took multiple positions there, just down 0.117%. So we are probably creating bottom wick to continue higher. Price did touch the 1 hour level and did drop though. Yeah. And this one didn't, 146. Yeah, this one did. Anyway, we're gonna wait for this 15-minute candle to close. Okay, I'll be back in a few minutes. I'll be back in a few minutes. All right. So what's happened here? $30 is closing bullish. I'm gonna wait, and I'm gonna do anything right now. Let the 30-minute candle close. 5 minutes more. Yeah. There is the pending order right there. I'm gonna leave it as it is because it's just got a 10 pip stop loss. Okay. Yeah, we are bullish. Price is pushing up. It's gotta wait. Gotta wait for the 50-minute candle to close. 3 minutes. Hmm. Yeah, so we are very bullish. Price is very likely going to push through here. So just want to wait for the 15-minute candle to close, and then maybe let's see if the pending order doesn't get triggered, I'll close it. But I have it right at 2682.07, roughly around there. Exactly where the that candle did react to. Let's see if you do get there and get triggered, if you do have a reaction. Yeah, okay. Did trigger. Let's see if you do pop, push back, pull down here. So this 5-minute candle, sorry, this 5-minute candle closes up here. Deep here, I'm going to close the trade. I'm not going to wait for the stop loss to get hit. It's anyway a very small stop loss. Yeah, it's about 9 pips, 7, 8 pips. Yeah, 8 pip stop loss. It's a very small stop loss. It's not even 10 pips. It's just about 8 pips. Yeah. So if we come up here, I'm going to close it actually even before we hit 8 pips. I'm going to close the trade. Okay. A minute for this 1-hour candle to close. 1 hour is closing very bullish. 30 minutes is closing bullish. 15 minutes is bullish with no bottom wick. There's a lot of bullish volume. That's all it says, that there's a lot of bullish volume, right? And there's no bottom wick, price pushing up, no bullish volume, but price can come down to grab liquidity when there's no bottom wick. Just keep that in mind. So that's the idea. If you do come down, that low is 79.40. Yeah, here. No, we are pushing up. Just getting ready to push up. Yeah, we're getting ready to push up. Yeah, that's it. Yeah, close it. Close it at about 5 or 6 pips. Broke the high. We are continuing higher now. There is no pullback. So there's no trade opportunity today. Price did break the previous high. We broke that high. We're continuing higher. No opportunity to take a trade today. Just very bullish. Price did not pull back to demand to a high liquidity zone. Take a trade. We are bullish. We're at all-time highs, and this is expected. When price is at all-time highs, there's a lot of all-time highs or all-time lows of that matter. And gold is not going to be at all-time lows, probably ever. We're going to be at all-time highs always. So when we're at all-time highs, that means price is very bullish when it's making all-time highs. So there's no reason for price to pull back to demand, H4 demand zones, right? This happens. It's not always, but it does happen. And right now, today, we're at all-time highs. So this is kind of expected. Price did come to this support level here, grab liquidity from it, pushed up. We're going to break this. We're going to continue and go up. Once we close below the London high, a 15-minute candle closes above this. The next one will pull back for liquidity, and then we're going to break the high and continue. Okay, that's what's going to happen. This is the London high. Once a 15-minute candle needs to close above. Once it closes above, the next one is going to pull back and then go up, break this, go through this red rectangle. And then I don't know where it's going to go, because price has never been here. There's nothing on the left to know where price is going to pause or stop. So, okay, yeah, that's it. I'm not going to be obviously chasing price here. I was looking for a trade down here, and we never came down here. Seems like we're just going to continue. There's no reason for price to drop 120 pips to go back up, because there is a lot of bullish volume to continue higher. So maybe I'm going to end the stream for today. It's going to be a very short stream. Hardly lost anything, 0.2%. It's hardly anything. Okay, so but that's the idea. So I'm going to end the stream now, but I just want you, whoever, if you are watching this, I want you to understand the idea here. If you want to buy, then this is a good area to place your stop loss to buy, price to move further. But you want to see a 15-minute candle close above the London high, right? That's the London high. So close above that high is, so basically a 15-minute candle close above 2682. Once you see a 15-minute candle close above 2682, wait for the pullback to buy for price to continue up. And then we might move up 150, 200 pips, we might just push up, right? Because that's the only place price could probably head to, 2,700, and that's about 150, 160 pips away. Okay, so wait for a 15-minute candle to close above the London high, above 2682. Wait for the pullback after that, and then take the trade to go up. Okay, that's the idea. I don't think because for me, I have to wait here. This is my area, and I don't think price is going to be coming down there for a trade. So it's going to be very boring if I stay here for another hour or so. I'm not going to be doing anything. I've got an hour for the 4-hour candle to close. Yeah, 55 minutes for the 4-hour candle to close. So it's going to be very boring to do nothing. Yeah, so we've closed above this resistance here. We are pushing up. 15-minute candle has to close above 2682. Then the pullback, then you buy to go up. That's the idea. Hmm. Okay, yeah, gonna just end the stream here. It's boring. We're at all-time highs. Price needs to pull back. It's not going to do that. Okay, so I'll be here tomorrow to do the exact same thing. I'll be here tomorrow. We'll do our analysis and then wait for opportunities. All right. See you guys tomorrow.